Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY, the Qs, and IWM. I've also got 3 trade ideas for you at the end of the video, so stay tuned. So jumping right into our S&P analysis, let's as always start off with our sectors. Up the most today was the XLY for consumer discretionary, up about 1.4%, and to the downside was XLU for utilities, about 1.6%. Now I do want to make mention that the XLY actually is a decent portion of the S&P. If we just check in quickly, you'll notice that here, tied for third is the XLY and the XLV in terms of weight in the S&P 500. So it's something we should look into. So XLY, if we just check in on the chart here, is showing us, and in my opinion, that it actually could head higher, right? We're breaking a key portion of market structure here, and into the end of the week, we could be headed to 172, and on a very good end of the week, we would be headed into highs here at 173.50. Now, again, that bodes well for the S&P continuing higher, considering how much of a chunk of the S&P the XLY is. Next up, we will just take a look at the XLK being the heaviest weight. We obviously want to keep an eye on what's happening here. A break of the downtrend resistance line, obviously that bodes well. If we can take out the 135, again, into the end of the week, we probably have room to run into 137.25. Now, is that going to happen all in one day? Maybe, but I think it's kind of a slow consolidation underneath. Maybe we poke our head above 135 towards the end of the week. And then lastly, we'll take a look at financials. Now, this one is slightly different, right? This is the one that a lot of people probably are thinking question mark on. It was massively unchanged, right? Pretty much sideways here on today's action, even after the FOMC meeting. But what I want to remind you is the fact that sideways consolidation after a very impressive run always bodes well for the stock finding value, right? We're accepting prices at these higher levels. And then if we think about this logically, right, the next leg higher comes from here as opposed to any deeper pullback. The leg would have to come from here and we would be lower, right? So this bodes well for the S&Ps actually moving higher, this acceptance at higher prices. Always remember that consolidation at the highs or lows, depending on the direction of the trend, right, is actually a good thing. So even though it was sideways pretty much flat, it's actually doing quite well, holding value higher as opposed to pulling back more aggressively. Now, we did mention that it was FOMC, so let's have a look at our ZN, the 10-year note. And there's something interesting that I want to point out to you guys, which is actually coming from a longer time frame chart. So obviously with the announcement, a little spur of volatility, but again, massively unchanged, just like our financials. But if we actually zoom out to something like a weekly time frame here and just check in on the market structure, which again, I do think is very important, even, regardless of what's happening with the announcements and the meetings, so on and so forth, we're pretty much at the breakout point here from what happened almost a year ago now, right? The beginning of the pandemic here. So here's a little bit of speculation, if you will, and take this with a grain of salt. It's just my own sort of theory, my own sort of idea, if you will. I'm sure other people have similar ideas. I'm sure other people have completely opposite ideas, but it's just something to keep in mind, right? The market likes what? The market likes certainty. So if we can hold on to, again, that sort of level here, rates remain unchanged as promised by Fed Chair Powell, then we go sideways, right? Maybe we see a little drift lower, a little drift higher, whatever. The market will like that because, as we know, the Fed won't have to intervene. Things will remain certain. But if we start to make a significant move lower, and keep in mind, this is already a very significant move in the ZN product. I mean, look at what has happened in the past. It's sort of one of these things that just grinds along, right? It's not one of these things that just falls out of bed and makes a, however many percentage move down that, we've seen right here so far. So keep in mind, if we were to seriously crack this area on the chart just about and see some serious follow through to the downside, the Fed then steps in. And what does that mean for the marketplace? More uncertainty, which the market doesn't like, right? So keep that in mind. It's just a little theory that I've, been conjuring up in my head. Again, other people, it's probably not an original theory. I'm sure other people are thinking the same, but something you might want to keep an eye out just for fun. So another thing to look at just for fun, and then we'll actually talk about some applicable things into the end of the week and why I actually think the market's going higher. But the VIX, right? The VIX made a significant new low into this area of the gap ever since, again, the beginning of the pandemic. Now, don't think of VIX as one of those products where you trade the gap fill and then you trade the gap fill reversal. It's not one of those things, right? You're not looking for a gap fill reversal here. You're not looking for the gap to fill immediately. Again, if that were the case, right, it would have done something like this. Boom. and then filled it there. But it's not one of those things. It's just something to keep an eye on. Keep in mind that volatility is contracting in the overall market. So getting into some actual tangible ideas and things you can use into the end of the week, let's take a look at SPY, and I'll tell you why I think we're going to 400 either by Friday or very early on next week. The first reason I think we're going higher is we obviously set a new all-time high even after making a significant move lower today in, as we opened on a gap down, and some levels to pay attention to as we head into the end of the week are going to be the 395.60 mark. And you're saying, well, that's going right through the middle of those two candles. What do you mean? Well, if I go to like an hourly chart, you'll notice, just check out all the price interaction we've had at that level. Key turning point, key turning point, key turning point, another one, and then a flush, right? So very, very, high interaction around that 395.60 area on any sort of pullbacks. I would be watching to see what happens there. If we start to see a reversal pattern form, say we do something like this, inverted head and shoulders, you're looking for higher, definitely, right? So keep that area on your charts in mind. After that, we have today's low at 393.37. And then lastly, the 391.22 might be something you want to pay attention to, but I don't think we head there into the end of the week, as we'll see in the market profile in just a moment. If we check in on our internals, if you're not familiar with this screen, get familiar. You can check out this video up here in the top right in one of those, card things that pops out. I'll explain how to set this up and what it all means. But for now, we're not going to read too much into what happened on today because obviously it was an outlier. It's an anomaly. Of course, we had the event and the announcement, but what was happening on Monday and Tuesday is quite telling, right? On Monday, we had a slow grind higher in the volume, but Tuesday, significant down move. And I sort of want to focus on that, on the actual price action of ES, because obviously on Monday, we made a significant move higher, right? Towards the end of the day there, absolute monster of a move into the close. And then on Tuesday, even though we saw some more significant selling volume, look at where our Tuesday low is compared to Monday's entire range, right? We'll just do something like this to denote where Monday's range is. We didn't even make it to halfback of the prior range. So that's telling me that the sellers here, they weren't really that strong, okay? Same thing with the ADD. Again, just a slow drift lower. It's not like we were down in trend zone here. And then on the ticks, again, we're going to write off what happened today. Obviously, extreme volatility towards the end of the day. But here, look at the cumulative build higher. And then again, this sort of supports the theory that the sellers there weren't very strong. Very, very little cumulative build on Tuesday. As a matter of fact, just flat for the majority of the day, right? So all that's telling me is that the sellers there were pretty weak, right? And as we head into the end of the week here on the market profile, I think this is the most telling of why we potentially go higher. So if you're not familiar with market profile, this over here on the left-hand side of the screen is a section of the chart that we would consider as poor structure. It's single prints, right? We only have a single column of letters there supporting the structure above from what's below. Now, on today's action, if you were watching this, let me just split this actually for a moment. If we split this profile, you'll notice that J period here could very well have left us with some single prints, but K period, the following period, actually came down and did what we call re-auctioned all of the prices of that spike there in J. So at any point in time, the sellers could have hit it hard here and essentially forced prices back down into the bulk of today's range, but it just wasn't the case. So buyers responded throughout the spike entirely. And what we're left with is actually better structure than what we, single prints, right? So what I'm getting at here is that sellers had their chance and buyers actually stepped up as we re-auctioned all of these prices. And you'll notice that we actually formed a new sort of distribution up here, if you will, and there's a decent amount of volume. I'm not going to ignore the fact that, of course, the bulk was done down here, but given the time of day, given, the actual price action, if you were watching this, price really wanted to hang back up here towards the end of the day, even after we re-auctioned the entire spike. So prices are accepting higher, which again is something to me that's telling me we could see either weak sellers just sort of give way to 4,000 here in the S&P, or stronger buyers really step up and get us there. So again, I think the market profile does a great job of illustrating that, which is, again, it's just another great tool to have in your tool belt. Something else I want to point out here is that there's no poor structure, right? We actually have a decent high and a decent low. If I just zoom in here a little bit, if we do something like this, you'll notice that there are technically two ticks. There's probably even more actually if I do Yeah, okay, so there's 4 ticks of excess at the lows, so it's not a poor low, right? And it's certainly not a poor high. So market structure here is actually decent, even though we saw this spike. That's what I'm getting at, and that's why I think ultimately the market does move higher based on the price action that we saw today as we moved through this spike. I hope I've hammered home the point enough now. If you're sick of me talking about it, let's move on into those 3 trade ideas and wrap up the video. Let's go ahead and bring up our chart here. We'll flip it back to the daily and we will get right into it. Daily, there you are. So the first one is going to be on ANET, which is for Arista. And again, just like the XLY here, I think it's sort of day one, if you will, of a break above this critical piece of market structure. Let's actually use the drawing tool here and put a value to it. It's 288.80, call it 289 the whole dollar. There is a small gap that was filled essentially, but what I would watch for here is an open tomorrow. If we open up above, I would watch out for a move into the 50 SMA. Why is that? Well, as we know, this candle here, extremely poor structure. There's nothing really in the past telling us that there's any sort of major area of support or resistance in there. So that's why I would be watching out as the 50, right, as the target there, right at 300 psychological. Again, if the market moves higher as a whole, I think that's a great setup. The next one is going to be on booking, BKNG. And again, this one here is sort of like day one, once again, of a breakout. Here's your pressure cooker top. We close strong above, and we could easily see some follow through from this significant portion of consolidation. If we just look at doubling rules and where the potential target could be, we're looking at somewhere over, let's just put a value to that, just above that 2,500 whole number. So watch out for 2,500, right? That's going to be a psychological number, but no, it could drift slightly above it. That is booking. And then the last trade idea is going to be on PDD. And again, this is a good thing for consumer discretionary, I believe. It does happen to be a Chinese company, but if we just think about where this hammer is and what happened in the consumer discretionary sort of sector, right? Of course, they had earnings, big gap down, but we've sort of left a gap in the chart. And now with this lower wick in place, it's telling us that buyers definitely stepped up, right? So we're looking for a move over today's high, which is at 153 the whole dollar, to potentially fill the gap up here to 158.59. So the trade is early on Thursday. If we, open up slightly below, boom, you take the break above. If we open in the gap, what you wait for is a move to retest the bottom of the gap. Again, this is assuming that it doesn't just take off right out of the gates. That would not be an ideal setup, but if we sort of open up higher, retest, maybe we print some sort of hammer candle down here, then you're looking for a reversal back up towards the gap fill up around 158.59. So those are the 3 trade ideas. If you enjoyed the video, learned anything new, enjoyed the little sort of commentary there on the ZN and FOMC and the Fed, feel free to leave me a comment down below letting me know that you enjoyed it, or you could simply leave the video a thumbs up. All that being said, I wish you a green rest of the trading week, and I hope to see you in the weekly watch list video on Sunday.